If you hold physical silver, you are standing on the edge of the biggest wealth transfer in human history. But according to Francis Hunt, the market sniper, you are also entering the most dangerous phase for your capital. Today, January 15, 2026, the silver market is doing exactly what Hunt's technical models predicted. It is going vertical. While the average investor is cheering for $90 silver, Hunt is issuing a warning. The window to secure physical metal is closing. We aren't just looking at a higher price, we are looking at the total unobtainium phase. Today, we break down why Francis Hunt believes a move to $333 is now mechanically inevitable and what you must do to survive the final parabolic spike. Francis Hunt is famous for his law of the parabola. He explains that in a generational bull market, 50% of all profits are made in the final 5% to 10% of the move. We are in that final window right now. The 70-year compression pattern in silver has finally broken, and the energy being released is tectonic. Hunt's analysis shows that as silver gaps higher like the recent jumps to $86 and $91, the market is entering a contagion phase. This is where the paper shorts are not just losing money. They are being physically liquidated. This isn't a trade you want to time. It's a position you want to hold before the parabola goes purely vertical. Let's talk about the target that has everyone talking. $333 silver. Francis Hunt doesn't pull this number out of thin air. It is based on the gold-to-silver ratio returning to its historical and geological mean. With gold currently soaring past $4,600 due to the Fed investigation and the dollar collapse, a ratio reset to 15-to-1 or even 12-to-1 posts silver comfortably in the triple digits. Hunt warns that the ratio is collapsing into a black hole. When the ratio drops from 80 to 30, and then towards single digits, silver doesn't just outperform gold, it obliterates it. This is the violent catch-up move he has been warning about for 2 years. A core part of Hunt's warning is the inelastic supply trap. 70% of silver is mined as a byproduct of copper, lead, and zinc. This means that even if the silver price goes to $200, miners cannot simply turn on the tap to produce more. They would have to build entire new base metal mines, which takes a decade. Meanwhile, the demand from solid-state batteries and AI infrastructure is set to consume 100% of annual production. China's January 1st export ban was the final blow. Hunt notes that the West is now silver-starved. When the G7 starts price rationing, the retail market will find that silver has become unobtainium at any price. There is a darker side to Hunt's 2026 warning. He believes the surge in precious metals is the true thermometer for the death of the fiat system. As the U.S. central bank faces institutional threats, the move towards CBDC central bank digital currencies will accelerate. Hunt warns that silver isn't just an investment, it is freedom insurance. He argues that as governments move to track and control every digital transaction, physical silver and gold will be the only assets that allow you to operate outside of a controlled, surveillance-based economy. This is why he advocates for multi-jurisdictional holdings, not just having metal, but having it where the state can't reach it. The market sniper's message for January 2026 is clear. The volatility will be brutal, the paper defaults will be public, and the price will be staggering. Francis Hunt's $333 target is the base case for a system in reset. The US Mint has already stopped sales. The COMEX is bleeding. The momentum is parabolic. If you are holding silver, do not be shaken out by the fake paper pullbacks designed to make you sell your physical to the banks. This is the end game. Michael Oliver and Francis Hunt have both signaled. Subscribe to Survival Economics to track every ratio collapse and every supply chain break. Secure your wealth, protect your freedom, and stay in the physical. I'll see you in the next report.